Welcome back to the Starr Personal Finance channel. I do appreciate you all joining me today. It's going to be a quick video. Just want to let you know, maybe you are not familiar with there being other ways that you can build your credit through Navy Federal. And maybe a lot of you do not explore the website to find out some of the things that Navy Federal have other than, of course, the high limit credit cards and also the pledge loan and all those type of things. There is other ways that you can build your credit just by reporting some of the things that you do every single month. So let's get into that right now into the video. So Navy Federal right there on their personal tab, it says build your credit history with recurring payments. So you can turn your bills into credit power. Now you have the opportunity to build your credit history by reporting recurring payments you already making, like your rent, utilities, and phone bills. It's that simple. So how does it work? The revolutionary reporting tool powered by Bloom Plus connects directly to your Navy Federal checking accounts and allows you to easily report up to 5 recurring payments to a major credit bureau. Getting started is easy. So you will enroll using the button below, link your Navy Federal accounts, select the eligible payments you want to report, and watch your credit bloom. Okay, so basically, and you all have probably seen this with Experian Boost in the past, and I think it's still a thing, and some other platforms that report rent, utilities, phone bills. So this is not a brand new concept, but this is a good concept because, and I've never like promoted them in the past, but the reason why I'm saying something now is because Navy Federal, which is a credit union, is boosting this up. Okay, so that makes a difference. It really does, because if you got Experian, who is the credit bureau itself, telling you, I like it better when a bank says, hey, I'm favorable to this. Okay, so that makes a difference, in my opinion, when the bank is on board with it as well. So this to me is a really good step, because say you're you may have a thin credit profile. Thin credit profile sometimes can be just as worse as having bad credit, because if you don't have anything that's been reporting for a while, or if you're new to credit, it can still kind of give you the same type of results. Either you're going to get denied because you don't have enough experience, or you're going to get a very high interest rate, just like people with bad credit would get. Still can get approved in some instance, but the interest rate usually be a lot higher. So same thing can happen when you have a thin credit profile. So I would say that this is a great alternative, considering that we also have heard about the mortgage lending changing to help people with thin credit profile. So if you haven't heard about that, I'm gonna pull that up on the screen. So right here, this is as April 22nd of 2026 this year. And so Fannie and Freddie to allow credit scores based on rent and utility payments. Prospective home buyers with a history of on-time payments for rent and utilities may soon find it easier to qualify for a mortgage thanks to changes at Fannie Mae and Freddie Mac. So this is going to really help people that may not have a good credit profile or may have a thin credit profile, to help you get some positive reporting onto your credit. So this is really and truly getting legs and really becoming a thing, right? So I would say that this thing with Navy Federal can coincide with this right here. And because think about it, Navy Federal does give out mortgage loans. So the only thing is about the rent reporting and the utility reporting is that when it's reporting, they probably won't report to all 3 credit bureaus. So that's probably the only downside to this, especially when it's coming to the lending part of it, when you're thinking about getting a home, because they're going to pull out 3 credit reports and they're going to look at the mortgage scores. But still, them even taking it into a consideration and into a factor to get you approved for a mortgage loan is even better. I just think that it's still a win-win at the end of the day. So if you pay your rent on time, you are more likely to pay your mortgage on time. For decades, our housing system ignored that simple fact because your credit score would never count in. That's nonsense, because credit history should include your rental history. There's a lot of us that has paid our rent on time, every single month, never been in late, never have gotten an eviction notice or anything like that. So I really do think that this is a really good thing. So Wednesday's announcements adds new credit score rules to Fannie Mae's selling guide, the official policy manual for lenders selling residential mortgages to the company. Last year, is that Pulte? I don't know. It announced Fannie and Freddie will allow mortgage lenders to use VantageScore ratings to assess borrowers' creditworthiness in addition to or instead of traditional FICO 10 scores. So it's one of those things where so many people are not getting approved for mortgages. And at the end of the day, this is what drives the banking industry. Banks have to get people in homes. They have to sell mortgages. They have to, because that's where they get the bulk of their money from. Because if you buy a car from, okay, a car is going to pay off in, just depending on what you get, how much it is, 7 to 8 years or whatever, if you really extend it out. But that's it. That's it. It's really capped. Credit cards, you can pay those off every single month. You don't have to carry a balance with those. Personal loans, same thing. It's going to be capped. You're not going to have it for 30 years. So they need those mortgage loans. They need those. That's what helps drives the banking industry. And without those, they suffer. And so it's a lot of people right now that do not see buying a home in their future, whether that's because of their credit or because of the high interest rates or because of how much the homes cost now in their area, depending on where they live at. So it's a lot of different factors that are keeping people from actually being able to get mortgages, especially like back in the past. So now we're in 2026 and people are still seeing where they're getting priced out. Something is going on that they cannot, and they steady having to continue to pay rent, whether that's an apartment or they're renting from a private owner, something to that effect. So I just feel like this is a way for them to actually open up the door for more people to get approved. Now, it can be a little scary at the same time. And the reason why I say that is because we know that back in 2008, there was a whole lot of mortgages that was done before then that was not good and caused that caused a real major housing crash in 2008 because of all those bad mortgages, all of those different things that went on during that time, and a lot of people lost their homes. So I don't think it's going to go that way. I don't think it's going to get that bad because I know that they're looking a lot more strenuous, but I just hope that it does not open up the door for some situations like that where, okay, you might can afford, your rent, but you got to understand that, your mortgage might stay the same, but your taxes could go up, so some things like that, the things that you're not counting on, your insurance may go up. So those are the things. So usually when you pay rent, the rent is set unless, you renew a lease or something like that, and then that may cause your rent to go up. So I just think that some of those things right there that you have to keep in mind, and I'm hoping that they're also keeping that in mind when they're looking at these decisions for these home loans. But at the end of the day, I still think that it is a good thing, especially when you're seeing major credit unions like Navy Fed getting on board with that as well. So let's click on this get more info and enroll button. So it's letting you know that you are going to bloomplus.com and, just letting you know. All right. So once you over here on the Bloom Plus, you do have the Navy Federal logo over there, just letting you know that they are conjunction with them and working along with them as partners. So the first thing they want you to do is put in your email. So you're going to connect your bank accounts, effectively create your Bloom Plus profile, activate your recurring bills, choose which bills you want to report, watch your credit history. Bloom will report your bills to the bureau. So you got to confirm your identity, you got to add your accounts, and you have to select your bills. Very easy. It's not a lot going on over here. It's not some things that you need to push. Now, of course, I tell anybody you want to look at your terms of use and all that type of stuff. A lot of stuff that we do not look at. They also have an FAQ here at the bottom of the page. So let's take a look at that very briefly. So what is Bloom Plus and how does it work? Bloom Plus is an innovative service provided by Bloom Credit, which allows you to select certain recurring bill payments that you would like to report to the major credit bureaus in order to demonstrate positive payment history. These Recurring bills may include rent, utilities. Utilities include water, electricity, and gas, and telecommunications, internet, cable TV, cell phone bills identified from your checking or savings account. So this right here also, let me just say this. This is another way, guys, for you to have a more better relationship with Navy Federal. Because again, I've told you this 100 times on the channel that credit unions and banks, they want you to have a relationship with them. They want you to use their services. They want you to use your accounts. They don't want you to just use your accounts as a placeholder so that you can still get loans and, credit cards or whatever, whatnot. Some people just keep just a savings account and that's it. This right here is going to kind of make you start paying more of your major bills through it if you want to get this perk, right? It's going to, it's an incentive for you to pay your rent, pay your utilities, and pay your internet, cable, TV, and your cell phone bills in your Navy Federal checking account. That's what it is, right? So, again, I'm not going to go through all of this, but it said which credit bureaus will receive my recurring payments reported to Bloom Plus. Currently, Bloom Plus reports your eligible recurring bills to TransUnion. So this is going to go to TransUnion. Like I was telling you guys before, a lot of times with the rent reporting things and, utilities and stuff, they only go to like maybe one bureau. But the best thing about this is TransUnion is what Navy Federal uses to do a lot of their lending decisions. So there you go. Again, it's going to give you more of an incentive to use your checking account with them. And if you decide to link this up with your checking account for them to get those rent reports, utilities, telecommunications, reporting to your credit report on your TransUnion report, especially if your profile is thin or if you're trying to rebound from a bad credit situation, this is going to be that incentive, right? It's going to be that incentive. So which current bills are eligible for credit reporting by Bloom Plus? It says 1 rent bill, 1 telecommunications bill, and up to 3 utility bills. So that's good. You can currently report up to 5 payment types to the eligible credit bureau. Now this is another good thing right here. What if I miss a payment on a recurring bill that Bloom Plus is reporting? If you don't make a payment, Bloom Plus does not report any payment information for that time period. If no payments are identified for 3 consecutive months, the bill will be reported to the credit bureau as closed or due to inactivity. In the future, if you begin to make payments again on this account, the recurring bill may be reopened. So closed recurring bills may impact your credit score. The impact to your score will vary based on your overall credit profile. So it says, please note that this action will only affect the credit reporting services provided by Bloom Plus and will not impact your bank or service provider. For an example, AT&T accounts or, any whoever you got your phone bill with or whatever. It's not going to affect those things, just your actual credit report. So that's something else to take in consideration. Like I say, guys, you got to always look at the fine print a little bit to make sure that this is something that's going to work for you and not going to harm you. Because again, like I said, if you go 3 months and none of those bills are reporting through your checking account, well, then it's going to look like a closed account on your account, and closed accounts can drop your score. And then reopening up another account, it's kind of like you're not getting an inquiry, but anytime you get a new account, your score can take a little hit from that new activity because you are lowering your average age of credit. So just take that in consideration if you do decide to connect this Bloom Plus to your checking account. I do want to know what you guys think about this. Do you think that this is a good thing? Is this something that you might be interested in doing? Please let me know in the comments. And I really do appreciate your time. Make sure that you like, subscribe, do all the things that help this video get pushed out just in case somebody else need to see this information. And I'm going to see you guys in the next video. I do appreciate all the love. Peace.